Because real estate can be the fastest track to financial freedom and to enhance your wealth, we're going to go through different strategies for investing into real estate. This may be overwhelming, but we're going to go through each of the pros and cons, and I'll walk you through them. So you have the buy and hold. Buy and hold generally means that you buy a property at a very interesting price rate and you hold on to it for about 10 years or more. The advantage of this, your property appreciates within time and you can rent it. That means you get passive rental income. That is exceptional. These properties go up, take advantage of it. The advantages of this is that you're building your wealth. You can build your wealth over time, you can hold on to the property, properties generally appreciate, and you're just receiving that rental income. So you can really build your wealth portfolio through properties. And this is usually hedged against inflation. The cons of this. There are some cons, of course. For example, property market can be an illiquid market. It can be difficult to get rid of the property in a market crash, for example, when prices do go down. If that happens, you need to hold on to it. Also, managing a property, a rental property, can be quite challenging when you have to manage those tenants. So it does require a bit of management skills. Number 2, you have house hacking. This entails living in your own property, buying a multi-unit property or building, for example, and renting out the other units. The advantage is that you're reducing the expenses while you're living in one property, and you're also generating income. So you have that cash flow that keeps on coming in. This is a great system. However, there are some cons. You do have to manage those tenants, and that means you're usually living in the same building as your tenants, so you may not want to see them all the time. Number 3, flipping a property. This entails buying a property, usually under market price, doing some renovation, doing some work to it, and then selling it afterwards for a higher price. This is amazing. This allows you to buy properties lower, put in the work, put in your taste to it, and then sell it for more. And it's usually in a very short period of time. The prices can be great for this. However, there are some cons to this. The cons do entail you do need to have pretty good taste when it comes to interior design. You need to understand what clients are looking for. You need to understand what the market's looking for. You do need to have knowledge of the real estate market and not buy overpriced. And you can also be subject to market variations. What if it goes up? What if it goes down? You might not know exactly what area to buy in. And one more last thing, you also do need to be able to understand some construction and management of that construction. It can be a little bit more challenging, and prices can go up of materials, for example, and contractors. Number 4, flipping off plan. This is a great option for people who don't actually want to get their hands dirty and do the work. They buy the property off plan before it's even built. That means buying from a developer, for example, buying at a lower price range, waiting for it, holding it, and then selling it once it's finished. This is great for somebody who just wants to wait on their projects, wait on their property without doing any work, and capital appreciation can be high. However, the cons are the following. You don't always know what the developer's finishings are going to be like. You can be subject to delays in construction, for example, and you can also have market fluctuations of up and down. The timeline can usually be between 1 to 3 years or sometimes even more if there are delays. If you want to know about flipping properties off plan, do check out my video. I explained to you why this can be a very good option. Then you have BRRRR, BRRRR. This stands for buy, rehab, rent, refinance, and repeat. This allows you to buy the property, usually a distressed property, you rehab it, refurbish it as if you're going to flip it, but instead you rent it out. And then you can refinance and buy another property. The advantage of this allows you to generate passive income through rental payments, and you also get property appreciation in time. Some of the cons is that it can be difficult to find distressed properties. It takes a lot of knowledge. You also need to be good at financing, understand how to get financing, and of course, manage your tenants at the same time. This isn't for everyone. Turnkey products. These are usually properties that are already completely turnkey. That means you know how much they're rented out for, there is a guarantee rent there, and you're able just to walk in and rent it out straight away. The advantages here are for people that want to have a predictable cash flow. They want to know how much money they're going to generate, how much that apartment is going to rent for, as it's already rented out. You don't need to worry about that. You don't need to worry about doing any work. It's already done for you. The disadvantages here are these type of properties are usually more expensive. So when you're going to resell it, there's going to be less opportunity for property appreciation and cash appreciation, of course. REIT, Real Estate Investment Trusts. This is a pool of people that get together. Usually these are publicly traded on the stock market properties such as commercial buildings, apartments, blocks, for example, or even large residential units. People put their money together and they invest together. The pros of this is that you don't have the hassle of property management. There'll be a third party managing it for you. And of course, you're not exposing yourself to as much risk as if you're doing it by yourself. Some of the disadvantages is that you don't always have control over the type of properties that you choose. The properties can be on the market, off the market, or even subject to market fluctuations. That means you may not even buy into that type of property. It could be something else. In that case, it's a blind pool investment. That can happen, so you won't have as much control on it. Real estate investment funds. These are a little bit different. They can be venture capital funds and real estate investment funds. Different to trusts, funds, for example, are regulated. These are government regulated. This allows you to invest into different types of properties and projects, for example, things that you wouldn't have access to, if it's not on the market. These type of properties allow you to have a piece of it and, of course, get the share. The advantage is you're not managing anything. The investment fund is, and there is an investment fund manager. The profits are usually high. You're looking around 20% IRR, so that can be very, very cool. The disadvantages are, for example, you are buying into something that you don't necessarily know what it is. That means blind pool, also very similar to trust. You don't have control over the management and you are locked in for usually 7 years or more. And there's never a guarantee that you're going to get your money back or that it's going to make a profit. Wholesaling. This entails an investor to find a distressed property and offer it to a third party for a discounted price. The investor never takes ownership of the property and instead they offer the contract to another buyer for a higher profit price. That means they are sourcing the property at one price, distressed price, and then finding another party to then resell that contract for a higher price. This I have seen before in the real estate market, especially at the beginning of 2014 in Portugal. The advantages of this is that means sometimes you don't even need to put any equity into it. You need to source the good properties, put little or nothing down, and then you can resell it very quickly for a nice profit. The disadvantages are it can be very difficult to find these distressed assets and negotiate them down. And then, of course, find a buyer that trusts you to be able to buy it for more. You're going to have to disclose that you are making that difference and you're making that profit because you sourced that type of property. So you're selling it for more, but it cannot be over market price. Otherwise, it's not interesting for your investor. Private lending, this is a little bit like shark loans. This entails lending to investors, for example, or to developers to purchase a property, and you will take interest on that loan or use the property as collateral. The advantages here is that there is very low risk, especially when you're using the property as collateral. Private lending can also offer more control to the investor as they can choose the terms of the investment and of course the terms of the loan. So this is interesting for them as well. It's also a way to not have to manage your properties and to be able to get money out of that quite quickly. Some disadvantages: loans are not always guaranteed and can be subject to market fluctuations like any real estate investment. Also, another disadvantage is that you do need to do heavy due diligence on your borrower, make sure they're creditworthy and have a solid business plan. Investing in real estate is financial freedom. I do it myself. I develop properties. My partner develops properties. It is a great way to increase your income. You can even have passive income from rentals. The most important thing, understand your market, understand your financial situation, and of course, get the right realtor to help you make those decisions. Because if you make the right decisions, I can guarantee you, real estate is an excellent way to increase your financial wealth.